Welcome back to the exchange. Muni bond demand is actually heating up. Inflows into Muni mutual funds were $11 billion through last week, according to Nuveen, with more than half going into high-yield bond funds specifically. And between high yield and more high grade, our next guest says there's plenty of opportunity out there. Joining me with his key sectors is Dan Close. He's head of municipals at Nuveen. It's great to have you here. Welcome.
Thank you so much for having me, Kelly.
Can we take a step back and paint the picture for munis? They suffered as the Fed began jacking rates up, and everything just kind of had to get reset in terms of yields that could entice investors. Where are we now?
Yeah, munis have had a difficult year so far this year, and it's primarily two factors. One is rates. Back up of 50 basis points in the 10-year Treasury has impacted munis. It's impacted all of fixed income, so munis has certainly been affected. But we've also had something very unique to munis. So far, we've had a lot of issuance this year, 40% higher than we were May of last year.
Wow.
We've had two back-to-back months of more than $40 billion in April and May. And so the market has had some trouble really digesting all the supply that we've seen. It's just issuers trying to get in front of the election, go in and issue. Back in 2016, there was a number of issuers that waited, and didn't like the outcome. And now we're talking to underwriters, to bankers, to issuers, and they're trying to get in front of it. So I think it sets us up nicely for the second half of the year, but it's been a little bit tougher so far.
That's really interesting. Put that in context. So $40 billion a month, would that be very high historically or only by recent standards?
No, very high by both recent standards and historically. I mean, in a given month, we usually don't see a $40 billion type month. But we are seeing just a confluence of issuance right now. And again, I think that's part of the calendar getting pulled up, issuers trying to avoid any uncertainty with respect to what the issuance might be for the election.
So if I want a 9.25% tax equivalent yield, what kind of exposure am I getting? What are and where would you kind of point people if they wanted something that wasn't gonna they wanted to sleep at night?
Right. So 9.25 on a tax equivalent yield is where our high yield fund is right now. So that is going in and buying primarily non-rated paper, certainly still essential service monopolies, but these are more non-rated double B, single B type issuances.
Such as any examples come to mind, like what kinds of projects or pieces of infrastructure or whatever?
Yeah, all of these are for infrastructure, but right now in our high yield fund, for instance, we have a lot of what are called dirt deals. So when you're going in and building a development in Florida, you're putting in streets, you're putting in potable water, but then you're getting repaid over time by going in and paying an assessment that's pari passu with property taxes.
Is that a risky endeavor? I mean, it would seem over time like that would be a pretty good one. But...
Yeah, certainly. You're taking a lot more risk up front, but over time it turns into essentially a local general obligation bond. So there is some more risk up front. But if we're wrong in our analysis, you do have a lot of value to lien. You have an ability to have a mortgage. So these types of credits are in the high yield fund. We have charter schools in the high yield fund.
Really?
Different types of credits that are a little bit more non-traditional.
And then on more of the high end, high grade, whatever, on the luxury side, where would you be looking in that space if you said, okay, maybe I don't need 9.25, but I'd take something over 5 for a pretty reliable, backer?
Right. And right now, on the entire municipal yield curve, no matter where you are, even for AAA-rated bonds, you're yielding more than 5% on a taxable equivalent yield. And that's why we've seen so many flows come in. But where we're looking right now, more on the high-grade side, water and sewer. We're looking at local general obligation bonds that are backed by local property taxes. And we've seen a lot of airport debt being issued, too. As we start to see airports go in and go a little bit more away from building just runways and gates, we're seeing more amenities come in for shopping, for retail outlets, for other things that come up, and we're seeing that.
I don't know why munis get this bad. I think this is fascinating. I love connecting all of these dots, and the election thing you mentioned as well. Dan, thanks for your time today, and we'll follow up and see, especially as the election grows near, how that's affecting investors.
Thank you so much for having me, Kelly.
Yeah, we appreciate it. Dan Close with Nuveen. That's it for the exchange. Tyler's getting ready for Power Lunch. I'll join him on the other side of this quick break, and we'll hear from our mock Fed. Don't go anywhere.
Muni Money is sponsored by BAM. Help build America's future with BAM-insured Muni bonds.
America is strong, and today's investments in essential American infrastructure make it even stronger. Build America Mutual only insures U.S. municipal bonds, providing an added layer of security to improve any portfolio with guaranteed income that helps investors reach their goals. Be part of building America. Build a better portfolio. Invest in BAM-insured bonds.